My neighbour offered to sell me her house, a flat, in December last year, and she gave me a price of 1.1 million. Now, I've lived in this block for some time, so it's not difficult to do some fundamental analysis on it. It's rented out at the moment, and she was getting £500 a week for it. So she's got a rental income of £26,000, and it's being offered to me at 1.1 million. Now, here's how I do my fundamental analysis. That is a rental yield of just over 2%. And what I have to compare it to is what I could be getting elsewhere. And the easiest place to go is the risk-free cost of capital, which is basically putting this money in a bank. And I'd probably get 6% in the current market. So my alternative is to get £66,000 for no risk at all. I don't lose anything. I don't have to paint my bank account. I don't have to carpet my bank account. I don't have to put a new bathroom in my bank account. I don't have to buy my new bank account a kitchen. And my bank account doesn't have a service charge, which has been given to me by an exorbitant landlord. And that is all fundamental analysis, by the way, when I do those things, because there is an upkeep cost to buying this neighbour's flat, which is not included in that £26,000 rental income. It comes out of that rental income. So then I think, well, here's some more fundamental analysis. I think she's not charging enough for this flat. It's quite obvious. The guy in it is getting a fantastic deal. So I go to see a letting agent and I say, tell me what I can get for a lovely 2-bedroom flat in place. And he says to me, what floor is it on? Because that's his fundamental analysis. He has to make a judgment of where it is in the block. I say it's a 2nd floor. He said, do you have a lift? More fundamental analysis. I said, no. I said, it goes up to it's a walk up, and it's actually a very high walk up because they were some of the biggest houses built in London. They're beautiful, but God, it's a long way up there. It's taking off the assessment all the time of the that's fundamental analysis. So he goes then to his website, which is shared between agents in the area. They input data about who has rented out property in my street. And he shows me that the maximum achieved in my street is £750 a week. So all I can do is raise the rent 50%, which would give me £39,000. I'm still not anywhere near the risk-free cost of capital. That's fundamental analysis. And that's what you do when you look at a company. It's as simple as that. Of course, companies are more complicated and they have more moving parts, but you're always going back to what am I actually getting here? What's my alpha versus just sticking it in the bank?